So I'll use a technical term. Trump pantsed the EU with the trade deal. He got a much better trade deal than anybody thought he could get. So much so that the New York Times has now got a story out going, is this a bad deal for Europe? They're more worried about Europe than they are about the United States. And that's what I think has sparked the dollar rally, is because we got such a good trade deal, got it such a good tariff deal. The Treasury market is in balance. For all of the issues that they have buyers for them. Now, they could tweak it around the edges, a little bit more of this, a little bit more less of that. But if they want to come out and say tomorrow, hey, we're going to issue trillions of dollars more in bills in the next 90 days than you thought today, and we need buyers for them immediately. Well, there's one way you do that. You raise interest rates to attract buyers. There's an old adage in the bond market: there are no bad bonds, there's only bad prices. And so all bonds can get financed. They just need a high enough interest rate. Scott Bassett knows all of this, and he knows that this is negative for the markets. And hopefully he talks Trump off the ledge from doing something radical with the mix of Treasury securities that we're going to have to issue in the next quarter. So that's kind of the thing we're going to watch for tomorrow, is, are they going to make a radical change to the mix in the Treasury bill, notes, and bonds that they're going to issue over the next 3 months?
So my initial thought in this is, so basically this could create short-term interest rates to spike. Is that basically what can,
if they do a radical remix?
If they do this, and what does that do across the curve? How does that impact all of the rest of the Treasury environment if that does happen?
Short-term interest rates are the financing rates, are the funding rates. Anybody who borrows money, anybody who uses margins is affected by short-term interest rates. If they go up, they squeeze the banks. Repo rates go up, they squeeze the brokers. If you trade futures, your margins might go up, and they might go up they might go up soon. And then you might be forced to put up more margin money immediately. That's the risk you face when you start messing around with what we refer to as the plumbing of the financial system. You might remember in September of 2019, we had a plumbing financial system problem when repo rates spiked up one day because they had an imbalance in that market, and it wreaked havoc all over Wall Street.
Yeah, I understand it much better now. Thank you for that, Jim. Or we're about 3-4 minutes out from data, but Shai, I want to get a question in with Jim before we get to data with you this morning.
Yeah. Well, I want your thoughts on FOMC tomorrow. Now, we know that Powell has not, in his history of being Fed chair, had many dissenters. I think that's going to be kind of important, and to see how many dissenters he does have. We know it's probably Waller, but what are your thoughts on that? And now, what does that mean for the Fed going forward?
So two things. You're right. I think Chris Waller, who's a Fed governor, has set himself up to dissent tomorrow. And you're also right. Powell has had the least number of dissents in the history of any Fed chairmanship. He's only had like 5 or 6 for the 7 years or so that he's been Fed chairman, maybe a couple more, maybe about 8, but that's an extraordinarily low number. Chris Waller, there's an old line in politics: if you're explaining, you're losing. And Chris Waller keeps explaining that he's going to dissent tomorrow, but it's not a political decision. Well, it is a political decision. You want to be on the short list to replace Powell. And if you don't dissent tomorrow, you've effectively removed yourself from the short list, because Donald Trump has made it very clear that if he does, not Waller specifically, but if anybody on the FOMC doesn't dissent from cutting rates immediately, that they're off the list for replacing Powell. So it is a political decision in my part that he's going to do that. So tomorrow they won't cut rates. We'll see if Waller dissents, which I expect he will. We'll see if Mickey Bowman, who's another Trump appointee on the Fed governor, dissents. She may. We'll see if any of the other Fed presidents dissent. They probably won't. Then the other thing will be at the press conference. Powell should be asked a lot of questions about, why are rates at where they are? Why are they not lower? When are you going to lower them? And he should be, put in an uncomfortable position to be more specific about cutting rates than he has to be in the past. And I think that this is going to, my guess is this is going to be a big rub because I don't think he wants to cut rates. And I think he's going to try and push back on that. And then he's going to get mean tweeted at and all of the other things that comes with him talking about not cutting rates anytime soon. And so that's really going to be the most market moving thing, will probably be the press conference and how he explains the level of rates.
Yeah, I would agree. And, we talk about the Fed not being a political organization, but President Trump has done a pretty good job at making it one now because it seems as though it's a campaign for whoever's going to be the next Fed chair. And, they all have to talk his book, what he wants. I mean, it makes it very, and like you said, Jim, even though they may not want to cut rates or some of them want to dissent for other reasons, it becomes, an interesting moment right now in time where, I mean, who knows, maybe just nothing happens until then. What is it projected for rate cuts? I think there was like a 60-something% in the September one, though, isn't it, Chai?
It's 59% in September, and for tomorrow it's 2.6.
Yeah.
It's 2.6%. So
Yeah.
nothing.
Yeah. All right. Well, we're about a minute out from data. Go ahead, Jim.
I was just going to say a couple quick thoughts on what you just said. The first one is the problem with the Fed is the Fed chairman decides where rates are going to go and everybody falls in line. So that's why attacks on the Fed chairman are so effective, because he matters. You don't do that to the Chief Justice of the Supreme Court because, they say, I don't like the way the court is voting on certain things, so I'll remove the Chief Justice. It doesn't change anything because you've got 9 independent voters. If the Fed were to go back to its they started this in 1986 under Volcker, but if they go back to their pre-1986 way of doing things where you have 12 independent voters, go ahead and remove the chairman. You've only removed 1 of 12 votes. You haven't really changed anything. If the Fed gets back to that, that would be a good thing. The last thing I mentioned too, real quick on the probabilities, I've always said that the meeting after the meeting, which is the September meeting now, it will be until tomorrow, the meeting after the meeting, anything between 33 and 66% on the probability is effectively a coin toss. At 59%, we're still at a coin toss in September. We'll see what Powell says tomorrow to change that.
No, I think spot on.
So we have wholesale inventories came in at 0.2%, expected minus 0.1%, and retail inventories came in as expected at 0.3%. So not a huge market mover, but it does say we may be seeing a little bit of weaker retail demand in that wholesale inventory number.
Yeah, I had to check my data to make sure it didn't disconnect and make sure we were still live here because there's not a lot of movement on this. So yeah, I'm even looking, let's see if gold did do anything. I mean, really just kind of nothing. Jim, I want to get back to you and talk about the dollar. So coming out of the the latest tariffs with Europe, dollar strengthened, euro weakened. Really just that's the trade. We were talking about that this morning and how the dollar is just really strengthening against the euro. And it could be just isolated in this current moment. But the dollar strengthening, I think, is a big thing because you've had a lot of shorts out there in the dollar. A lot of people have talked about coming out of the dollar, coming into Bitcoin, coming into gold, coming into equity indexes, coming into the euro. Thoughts on the recent movements coming off of the recent EU tariff situation?
So I'll use a technical term. Trump pantsed the EU with the trade deal. He got a much better trade deal than anybody thought he could get. So much so that the New York Times has now got a story out going, is this a bad deal for Europe? They're more worried about Europe than they are about the United States. And that's what I think has sparked the dollar rally, is because we got such a good trade deal, such a good tariff deal out of the so it's kind of the opposite of what we saw on Liberation Day, that when the market thought that we were getting too much tariffs and negative tariffs, the dollar fell. Well, we got a positive tariff story out of the EU, and the dollar has rallied. I think it probably will rally a little bit more for the next couple of days, but I've also argued it's sort of reconnected with interest rates, because prior to Liberation Day, April 2nd, it used to move up and down with interest rates. If you look at a chart of the 10-year, you were looking at a chart of the dollar index or vice versa. I think that reconnected it somewhere in like May, but at lower levels. So for right now, the dollar will rally a little bit, but if it's going to continue to rally anymore, you're going to need higher interest rates.
Excellent. And so I want to just really your thoughts on this market in general. It's just been endless kind of grind higher. Are there any risks to this market anymore? or where do you see it?
Yeah, two things. There's an old adage in trading, never short a dull market. And if you look at the MOVE index and bonds, the Merrill Option Volatility Estimate, which is the VIX of the bond market, it's at its lowest level since 2022, since the Fed started raising rates off of zero. You could see that in the market, that it's very quiet right now in the bond market. It doesn't seem to do much other than moving about a 10 basis point range. So this market is winding up a lot of power here, getting ready to break out one way or the other. So the bond market, I think, is probably going to stay asleep for the short term, but over the medium to long term, I think it's poising for a breakout one way or the other. If you ask me to guess, I'd say it would be in higher rates, but we'll have to see. The stock market, I think the big thing that's changed in the stock market, this is not unique anymore, is the dominant player right now, I believe, is the retail trader. It's not a hedge fund. It's not an institutional investor. You can forget the Barron's Big Money poll. It's not as important as going on Reddit and figuring out what all the retail traders want to do, because they seem to be the dominant player. Meme stocks are back right now, and that is going to continue to play along until something upsets this equation. So this grind higher probably will continue. Maybe if I'm right and we get a breakout to higher rates, that might be the thing that upsets it, but we'll have to see if that even happens in the first place. But right now, I think if you wanted to know who's behind all of this, is retail. And the last thing I'll say about retail, in the plunge in April in the market, if you are a professional investor, you sold, you lost money. If you are a retail investor, you FOMO'd in and you made a lot of money. So retail has been winning over the last few months as well, too.
And we have to end it there, Jim. Can't thank you enough about explaining that QRA. It's always been one of those things where I see it on X and I'm like, I kind of get it, but you laid it out perfectly for us today. And that's why we love having you on here, Jim. We really appreciate your time. Thank you so much.
Thank you. Bye-bye.
This presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader, LLC. Trading futures involves substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.